All right, and that's pretty much where I want to leave off the whole sort of educational side as much as Forex trading made simple, and bring it back into the actual reality of the actual markets themselves. Okay, so what you need to be doing is just looking at the market, looking for opportunities. Now, I'm looking at the European session here, and I'm sort of going to get a little bit expansionary. We do have a mixture of numbers here. There's some French economic numbers which have just come out, a little bit mixed. Okay, that doesn't really provide us too much of an opportunity with this mixed bag. But understanding the French numbers themselves are, minor numbers. It's the German numbers that really make a difference to us, and that's where your direction should come into. Looking at the equity markets and knowing the influence they're having, there's a massive push down, drive down in sterling at the start of this European session, and it's more on the back of the Brexit issue. Okay, and so what we're seeing is a big shift down here in sterling, and it's having a bit of an impact across the board on a number of currency pairs. Now, a lot of these currencies, this is one of the key parts to understanding which currency pair to trade. Now, the major currency pairs that are against the dollar generally correlate. And if you have a look at the situation here between Aussie, Kiwi, Euro, and Sterling, they all positively correlate. Aussie's off, 20, 30 points. So is Kiwi. Sterling is off almost 90 points on the back of this sort of geopolitical situation. That's driving the markets. This is the one here that is the focus. It is pushing Euro down, but what we are seeing is if I just come back over to the European page, you'll see Euro Sterling, which is going up, and this is slowing the move down in Euro. Okay, that's why Euro's not going too far and Sterling's going a lot further, because this is a bit positive for Euro and negative for Sterling. All right, so there's a number of different things to understand from the different time zones, looking at the various currency pairs themselves. You could be looking at, dollar yen here. Now, dollar yen is off a good way here as well. And you can see there's not too much influence at the moment on the dollar index. This would be a nice sterling yen move. And as you can see, sterling yen is off, well over 100 points. So what we want to do is, if you can get your technical analysis correct, then start to build some knowledge around the fundamental aspects of the market, then you can isolate the best trading opportunities. To me, at the moment, Euro is a much better opportunity than the Aussie and Kiwi, because these currency pairs are trading mid-range. Dollar yen, well, we know this is going to be a good opportunity as it comes up towards the cloud. I'm actually almost more inclined to be looking to buy here, especially with the BOJ sitting under 111. All right, and this is the focus, and the way you should be looking at the market is moving with the market. So as we come into this European session, which has just opened, we are now looking across the major European currency pairs, because that's where the major action will be. All right, so this is it. It's a relationship between understanding the currency pairs, all right, understanding the general backdrop of the news and how that influences the various currency pairs, and then trying to pick off the nicest low-risk currency pairs at the moment. Now, this situation here, if I just blow up sterling, okay, now we've got UK CPI numbers coming out in just over an hour. Now, this situation is going to make that trading opportunity somewhat obsolete, okay? The volatility around this geopolitical event and the fact that the currency is trading mid-range is already telling me it's a warning signal just to beware. So I'll probably sit back and watch sterling until there's some greater clarity around the actual currency itself. Okay, and this is what you've got to be able to identify when the currency pairs are looking good to trade and when they're not. All right, okay, so let's get a few questions rolling there. This is really an ask me anything sort of situation. So, yeah, for some of those members, Toddy, I'll come back to your Fibonacci levels tomorrow. That's a really good one. And Mark does look at those very closely in London. He's a bit of a Fibo expert. All right. Okay, John, you've got a question there coming up. I also have David's got a question about the drawing trend lines. Okay. Now, how do we draw these trend lines? Well, let me come back to the euro just briefly. Now, the trend line progression or drawing trend lines is an ongoing event. As the currencies move around, we're constantly updating the trend lines to sort of find out where those key levels are. Okay, so what we're looking for is isolating the highs, okay, and matching up those with the previous highs. That gives us resistance. And when you're looking at the lows here, you're looking at hooking up with the absolute low. Oh, let me just fix that one up. Okay, and then finding the next low, and that's the start of your support trend line. Now, when it comes to drawing trend lines, you really need to have 3 trend lines to really give it some sort of significance. In this situation here, this is close enough is good enough. This was the previous high before we've just had this recent high. So in euro on the top side, and this is going back to the very high up here at 117 back in August 2015, we now have a very good resistance line coming in around 113.30. Of course, down here around 112, the figure, it doesn't really come into consideration. But what we do have is we do have a support line coming in down here around 108, sort of 50, 70. But that's in a bit more of a longer term perspective. If I just blow the chart back up, you can see this short term trend line where we've got the starting point down here around 108.40. We've got the sort of second touch here around 110.60. Okay, and then to the current market where it's just broken down, and this is breaking down through 112.40. Okay, you should be looking to get into the currency under 112.30 and looking to stay short as the market comes through. And this is where you can bring in those economic numbers. If we get weaker German numbers, in particular German manufacturing numbers out in about 7 minutes, then we could have a good opportunity to get short euro here. Okay, John, good question there. What time frame are we looking at our charts? And do we only use one time frame? Well, what we do is, and this is just coming from our banking days, we always only looked at, well, the lowest time frame we would look at is hourly charts, and generally hourly bar charts. We don't really go into the candlesticks that much. I know a lot of sales guys do, who want to tell you a story about what's going on, but we're looking at highs and lows and focusing on those things. Now, if we don't have any technical levels, you do go into, on the hourly charts, we do go into the daily charts and also into the weekly charts looking for those longer term levels. Okay, and that's where you'll find much longer term levels. And I'll just get rid of these horizontal lines. I wanted to isolate those highs and see where they were. But if I come into the daily charts, and you can see I've got a trend line at the top here, this is the absolute resistance level up around 133.40. So for most trading decisions, we use our hourly charts, but if we don't have any charts there, if we don't have any charts on, or trend lines, I should say, on our hourly charts, we do go into the daily charts looking for the longer term trend lines. These are much more significant and we give them much more credibility. Okay, as you can see, there's a bit of a crossover here with the long-term trend line and the short-term trend line, which is the red trend line. That's why I've given those two trend lines a little bit of a difference there as well.